Good morning, everyone. My name is Onke Mkiva. I head up the technology, media, and telecoms business for RMB. RMB is a sub-Saharan African regional bank with a presence in about 16 markets on the continent. And my specific focus is on technology, media, and telecoms, including fintech. We really think about the mission of our business. We really think about the mission of our business as enabling connectivity and digitization on the continent. And today I want to share about some fundamental principles that are important for us and really challenge this room to think about the structural changes and focus areas that are important in taking Africa to the next level. I also want to talk about some of the grassroots innovations, a couple of examples that we work with on the continent that really focus on these structural issues to help us build on our success, to help us build on our success from a fintech perspective to date. And then I want to challenge each of us to really, from a call to action perspective, in terms of what next in building out these fintech capabilities across the continent. So why are structural anchors important in building out fintech capabilities and really developing capabilities that build on from our successes to date? The obvious thing is that Africa is a net consumer and has a significant production gap. We are 17% of global population, but actually only contribute about 3% from a GDP perspective. And at the same time, you've got entrepreneurs who are on the ground, who haven't sat back and are developing amazing capabilities across the continent, and SMEs actually make up 90% of the businesses on the continent. And as a result, they employ 80% of the people on the continent, which really means focusing on solutions that enable SMEs on the continent will significantly move the needle for us. And I've picked 3 examples that RMB works with very closely to talk to this. And then at the end, I'll talk about some of the fundamental principles that are really important for us in enabling SMEs and building out capabilities that deal with the structural shortfalls on the continent. This business is called Setana Capital. They're an embedded finance solution business that leverages the traditional wholesale and distribution ecosystem in order to make credit scoring decisions. The challenges that you deal with from a micro SME perspective is obviously the lack of business registration. It's the lack of financial information. And what this business does, which RMB has invested in, is it collaborates with the key distributors into the micro SME space and looks at historical data and purchase history for each of the micro SMEs using the entrepreneur with a simple ID number and an ID card without a business registration from a KYC perspective. That purchase history is then put into a proprietary algorithm that then assists in credit scoring in order then to make disbursements. The disbursements are made directly to the wholesaler and not the SME. And so really the solution is an advanced stock purchase solution. And on inventory working capital cycle of about 14 days, the merchant then settles Setana Capital. The interesting thing here is they've also developed an interesting mechanism for early detection on any potential stresses with the micro SME by looking at the inventory turnover cycle. What that means is if a micro SME was buying stock at $100 a week from the wholesaler or distributor, they give them an additional $50 a week. They expect that the inventory working capital cycle should actually be exactly the same, i.e. that the micro SME is able to churn out that 1.5x of inventory in the same period to prove that indeed the challenge was actually the working capital solution. Should that working capital inventory cycle be longer, it typically is an early detection that, quite frankly, the micro SME does not have a capital problem, but has an access to market problem. Another interesting solution is a business called GrowBox. What these guys do is to digitize the operations of small-scale farmers as well as cooperative across East Africa, which allows for better aggregation of the entire value chain, from the loading of the produce, be it milk, be it grain, whatever the case may be from the farmer, all the way through to the co-op, as well as the offtake process with the co-op. What that does is it better aggregates small-scale farmers in order to attract larger off-takers. It provides a digital trail and ability to perform data analytics on small-scale farmer productions across East Africa, and obviously allows small-scale farmers to attract better working capital, given the strong audit trail and digitization of these various small-scale farmers. The last solution I'm going to talk to before I challenge all of us here is a recent solution that RMB developed, which is called the Africa Gateway. Because of the de-risking of international banks over the recent years, where international banks were pulling out of Africa, and a number of small African regional banks were unable to process cross-border payment because of the de-risking. RMB developed a solution where we're basically an intermediary that created foreign currency accounts for a number of regional banks on the continent in order to process hard currency and basically act as a bridge between international banks who would have de-risked regional banks on the continent from a clearing and payments perspective. What this allows is a much more robust KYC and AML governance process, because we know and understand the smaller African regional banks. And what it does is it bridges the gap between smaller African regional banks and the rest of the world. So these are some of the examples that really focus on structural, fundamental challenges that I want to challenge all of us here in the room to think about when we think about the next elevation of fintech innovation on the continent. And I think some of the speakers alluded to the hard yard and the hard work that's required to really focus on the underdeveloped, not just for impact, but really for sustainable wealth creation and lifting the continent from a production perspective. And these are the 4 key principles that are close to our heart. We focus on reachability and market depth, as of those 3 examples that I mentioned, where it is a lot easier to look at some of the elements and ecosystems that have already been developed from a technology perspective to then overlay fintech services. But really what we focus on is traditional ecosystems that have not yet been digitized, and where we build bridges that address structural gaps and shortfalls in various areas of the continent, such as the micro SME space, the small-scale farmer space, as well as with regional banks on the continent. We really focus on partnerships versus competing. Again, the previous speakers really highlighted that if you think about the job to be done in the context of where Africa is and its potential, then all of a sudden you realize how much work needs to be done and how futile it is to start competing already. And this is an important philosophy for us. We think it is important to proactively contribute to the regulatory dynamics and not wait for the regulators because they don't understand the space that we operate in. And it is our responsibility to shape the evolution of the space and how regulation ought to enable it. And as I've highlighted on the previous examples, we see it as critical to leverage the power of ecosystems, not just those that are already technology-enabled, but how can we use existing traditional ecosystems to develop solutions that are unique and deal with structural gaps and challenges on the continent. And so I'd like to invite you guys to partner. We are RMB, a sub-Saharan African bank headquartered in South Africa. The last thought I want to leave you with, a bit unconventional for finance people, but I like this quote by a Navy SEAL called Owen. He talks about, Mark Owen, sorry. He talks about the job to be done and what it is that inspires the Navy SEAL to go all the way, in how they do their work. And I think we can all agree that sometimes doing business in Africa is like being at war. And this is what he says. He says, we're not superheroes, but we all share a common bond in serving something that is greater than ourselves. For them, it is the brotherhood that ties them together, and that bond is what allows them to walk willingly into harm's way together. And I think the job to be done on the continent really resonates with the statement in terms of the hard work that is required to build it together. Thank you.